Morning, everybody. Great to be here. So how many entrepreneurs in the room? People who are starting companies, engaged in welcome to heartbreak, right? A life of drama, highs and lows. And the rest of you, I imagine, are just suppliers, intermediaries, corporate participants in the world of travel. It's great to have you here. So I'm going to spend a few minutes talking about what we see in the landscape and why we're excited to be investing in travel and transportation, and a little bit more about our firm and our strategy at the end. And just in quick order, we are a sector-focused fund. We are a small fund model. We believe firmly that small funds in venture capital are far more productive and flexible than some of the big horizontal funds that we all know from our history. As Amir said, we're investing in we're investing out of our fourth fund right now, which we call Thayer Ventures 3. Don't ask. And we really believe in venture as a service for entrepreneurs. When you're a sector-focused fund like ours, in my view, the thing that we bring to the table is business development, sales, and strategy support for the companies we invest in, right? So that's what we do. So let me just sort of walk you through as quick as I can. I'm going to use about 23 more minutes to walk through this deck and then open up for some questions. Travel for us is a very, very broad landscape. Hospitality, tourism, food service, distribution and logistics, elements of entertainment, and we know that it is a sector that is growing faster than global GDP. It's undergoing elements of dislocation and disruption that we haven't seen for generations. It's also an industry that's historically been resistant to the adoption of technology. It's been slow to the game. And so in our view, there's a great deal of opportunity of inefficiencies to be corrected throughout the value chain. It's made up of a whole number of sub-verticals that have very interesting characteristics in and of their own. And many of these, surprisingly, are still largely offline, complex distribution relationships, growing at different paces in different parts of the world. And this slide doesn't even include what's happening in urban mobility and transportation more broadly. And as I said, one of the things that I think is so interesting and why we started this firm to focus on this specific sector is this sort of pent-up opportunity to create change and to innovate. And it's really only been in recent times, right? In sort of the industrial scale, it's only been in the last 20 years that we've started to see significant disruption in travel, right? It sort of started in the 90s when the OTAs started to rise out of the consolidation of what was happening with the GDS platforms, and the brands, many brands sort of ignored that trend and thought it was, sort of insignificant, and then how that swung through time. And now we live in a day and age where things are popping up that we never dreamed of. I'm sure there isn't a hotel executive in the room that anticipated Airbnb, right? So as that has hit this industry, and I would argue that as the employees working in travel suppliers and across the industry have turned over and a new generation has taken the helm, we've seen an industry that's begun to look for opportunities to innovate. And now that has created what to us is sort of like a fertile landscape, or think of a desert in the spring after a warm rain. What's the first thing that happens, right? Thousands of wildflowers just start to bloom out of the desert. And that's what's happening in travel now and in entrepreneurship. So we're seeing more and more deals, and it's become incredibly interesting. The dynamics are still incredibly intense. All right, the battle in distribution is not slowing down, and the value at stake is absolutely tremendous. And the results have been staggering, right? This is a really powerful slide. It's hard to see. Let me look at it this way, right? So down this axis is the average EBIT margins of these companies. Down this axis is the compounded annual growth rate. And the circle represents the average return on capital. Now, who's been winning this battle, right? That's a massive shift in enterprise value and wealth that's been taking place, and that's not going unnoticed. So these are the kinds of things that have generated this very intense phase that we're in now of innovation, of testing, of engagement, which is great for entrepreneurs, and it's great for investors who want to be around the hoop. There are a number of, simultaneous to this, and I think this is the important part, right? As this has been unfolding in our industry, technology has also been changing at a pace that I don't think any of us really could anticipate even 10 years ago. And those changes are impacting many, many industries, and that's why we see so much activity, especially in B2B investing, which is specifically what we do. And one of the things that I think is so powerful, and we have to remember this, is that the fuel for so much of this has been data. And we've been talking about data for, I don't know, it seems like it's been for a long time. I mean, the cycle has been through, analytics, and then people started calling the same thing big data. And I would argue people are now calling that AI. But the truth is, it's this incredible amount of data that is the fuel for innovation. Data is not a product. Right? Data is not necessarily a technology. Data is just the fuel that's enabling so much new thinking. And that has sort of intersected with a number of just powerful and engaging technologies. And frankly, again, none of these are companies. Right? Technology is not a company. Technology is not even a feature. It's just this material that we're now working with to reinvent the way things work. And that's sort of what entrepreneurs do. And the themes that we see impacting travel and transportation, and frankly, so many industries, right, are obvious. From the shift to mobility. Again, it's interesting in Silicon Valley. We get hyper about things, and we talk about them, and they're on, they're in everybody's blog for about 2 years, and then we kind of ignore it. Like, okay, well, that's done. But the reality is it takes longer for these things to become high-impact parts of industries. Sort of like the dot-com bubble and crash of 99, 2000, 2001. We weren't wrong about the internet. We were just a little too hyper about it, right? It has turned out to be transformative. And so I'd argue many of these things will continue to be powerful and transformative. Digging in more specifically in travel, we then see sort of these technologies and this material intersecting with a lot of very interesting things happening in the broader travel space. The hotel technology stack is a roadmap area for us. As most of you know, it's been dominated for a long time by Micros, now owned by Oracle. At the same time, that platform has been enjoying the fruits of practically monopoly control, right? The world has been shifting. And now we live in a world of open APIs, of cloud computing. People are demanding, consumers are demanding more flexibility, owners are demanding more flexibility, and that old tech stack doesn't work, and they're slow to the game. So we think that there is a dramatic, and we validated this with our partners, there's a dramatic change coming. The hotel tech stack is turning over. And the PMS is in play. We just made an investment in a company called Muse Systems, based in Prague, focusing on the international landscape as a PMS player. Currently operating in 37 countries. They've integrated payments into it. It's an open platform. It's exactly what you would expect a business to be running on these days, not the old tech stack. The private accommodation space, I mean, again, we've all know how Airbnb has become the poster child of the private accommodation space, but there's a lot more going on there, right? The vacation rental category is one of the great sort of fragmented, unwired, inconsistent categories of sleeping away from home, but it's huge and it's growing fast. And so there are so many tech companies that are figuring out ways to organize that landscape. We have an investment in a company called BookingPal, which is building the GDS of the vacation rental category, plugging into all of the professionally managed content out there, which you have to get through, or you have to get to through these legacy property management systems. And so BookingPal is playing this critical layer to get that content online and bookable. And then Sonder, sort of at the other end of the spectrum, has reinventing, they would argue, or deconstructing, they say, the hotel concept itself. And Sonder is bringing brand standards and consistency to the asset class of vacation rental or professionally managed or even just urban private accommodations. Makes a lot of sense. It's hard to book a 3-bedroom hotel room when you're traveling with a family of 5. This asset class actually makes sense to many travelers. And you see the big hotel suppliers, Marriott with Hostmaker, Hyatt with Oasis, right? Accor with One Fine Stay. Everybody's now figuring out, as a brand company, as a management company, how do we play in this category? So, in our view, this $100 billion growing to $200 billion global fragmented landscape as it organizes is going to create a number of incredibly interesting opportunities. Ground transportation is another one. Think about autonomy and you think about urban mobility and what's coming more broadly in travel. There's just incredible opportunities. And I think it's an important point for us for me to highlight that what we've noted is that our industry has thought about and defined itself in a very specific way for the last, 50 years. And the definition of what is travel and hospitality hasn't changed much, right? And like many industries, when the world shifts, it's, those entrepreneurs or those thinkers that begin to look beyond those boundaries and redefine the space that become known as the first movers when the rest of us catch up. And this whole idea of transportation as a service, of urban mobility, why isn't that part of travel? Well, we would argue that it is. And we're beginning to see more travel companies thinking about that space and incorporating it into what we do. It's not a total coincidence that the CEO of Expedia became the CEO of Uber. And I think that there's more really interesting things happening in transportation. Meanwhile, the capital markets have begun to catch up with what's happening in our space, right? The inflows globally have been dramatic. And again, I would say that you can't talk about travel in the context of regional. When you're an investor, in my view, travel is a global framework. It's a global concept. And so we look at everything from a global perspective. The inflows have been broad, they've been dramatic. Europe is incredibly interesting, right? Much more fragmentation in the lodging sector there, so there's opportunities. That's why one of the reasons why we like Muse Systems is because of their ability to operate outside the US. They're dealing with the tax and regulatory issues in the PMS. They're dealing with a more fragmented landscape where the big chain concentration in the US sometimes makes it a little bit more difficult. The mid-market and the larger private equity players have moved into this space in a big way, right? We talk about venture investing because we're all in that stage. We talk about corporate investing because we understand that. But meanwhile, the private equity guys have started to move in and signaling that this is going to be a category that's going to see roll-ups. It's going to see combinations and acquisitions that are new. This is good for us, right? We need this kind of liquidity to fuel the success of our entrepreneurs, and it's frankly through entrepreneurial, volume and velocity and engagement that the suppliers, that the players in the space see the opportunities to innovate. Valuations have been rising as well, right? So, all of these things sort of come together to suggest that this is becoming a healthier and healthier ecosystem for investing and for growing a business. The opportunities for liquidity are increasing. The values are increasing. The players in the space are engaging. So, good news, good things happening. We like the position that we're in. And, just more obvious transactions, things that we all know about, and liquidity being driven into the market. So what have we done to harvest this? When we started this firm, we had a very clear point of view that we wanted to be a value-added investor to our entrepreneurs, which means business development, sales, and strategy. I think when you invest in a great company, They don't necessarily need another smart person at the board meeting once a quarter to, ask them about details on the balance sheet. They need somebody in between those board meetings who can make introductions to potential customers, especially early stage companies. It's only through working with customers that companies really learn how to manage and build and develop and pivot and succeed. We also understand that this ecosystem of travel and hospitality is just completely different than many other industries. And so a real focus is important for us, not only in our ability to understand what might work, but to also understand what major suppliers, intermediaries, and other legacy players, what they're looking for, but also to specifically be able to help our companies. And I think that we see this kind of focus also translating into the success of some of our businesses. And we have a perfect example. Yesterday, if any of you were at Skift, you saw the CEO of a firm on the stage, and he talked about what a firm is doing. A firm is a horizontal company developing essentially this new payments model for people so that they can pay over time versus pay at once. We're an investor in a company called Uplift that does exactly that, but specifically in this industry. And it's a completely different type of a company with respect to this customer base, right? So where a firm may be very, very good across the e-commerce platform, Uplift is using signals that are unique to travel shopping and travel behavior to drive underwriting of the traveler when they're making the booking. So they're able to dig deeper into traveler credit. They're able to deliver better pricing. And then the halo effect for these travelers, 450, 500 FICO score, getting approved, the halo effect for the brands has been tremendous. So, we see the benefit of that focus. And while a firm will be an incredibly successful business, a travel supplier might want to think twice before just using that kind of generalist layer when you have something so specific and such high quality in this industry. So anyway, we've built this team. Catherine Grass recently joined us as our venture partner in Europe, based in Madrid. We have a good balance of characters. Jeff Jackson was a former CFO of Sabre. I like to kid Jeff and tell him that he's the guy that if he was the only investor, we never would have done a deal. If I was the only investor, we would have done everything. And so the two of us balance each other out. And then, of course, Mayor Farrell just finished his stint and is coming back to us this summer. And then Lee Pillsbury, legend in the hotel business. I think anybody in the hotel business knows Lee. And then one of the things we did very early on, again, to back up our point of view on being able to deliver real value, is we brought a number of high net worth individuals from the travel and transportation industry as LPs into our fund. So not just a loose advisory board of names, but people who actually have skin in the game so that they could help us open doors. We also have been making a case with this latest fund to the strategic players in the industry, travel suppliers and legacy intermediaries and other players in travel, for considering participating in a fund as a way to get a window into what's happening out on the edge versus either building their own internal business, which is incredibly expensive. Very few have done it. The one great example in travel, of course, is Jetblue Ventures. Absolutely just, perfect example of doing it right and doing it well, but hard to do and expensive and takes huge commitment. So we think there's this sort of hybrid model, right? Where you can build it yourself. You can have a whole bunch of different initiatives running. You can invest off your balance sheet. We've seen people doing that. That's not going so well. Or you can participate in a fund and get the benefits that we think, in addition to all those things that a company does, being an investor in a fund gives them a view into what's happening out there. And we've been successful with this model. We have two very large corporate LPs that were in our first closing, largest hotel company in the world. We have a second closing coming up, but are including more strategic. So we're continuing to sort of build on this idea of being deeper and deeper in the industry and focused on adding value for our entrepreneurs. And ultimately what this leads to is what you would hopefully see any venture capitalist better put this up, right, as part of their deck. This is our job. to generate deal flow, to do our due diligence effectively, to make good investments, and then to help our companies grow and then ultimately exit. We have spent the last 8 years, really 9 years, building this business. And again, one of the benefits of a small fund model is that we play well with others, right? We like to syndicate. And so we have had the opportunity to co-invest with a number of great firms across the Valley and frankly internationally. And we've really sort of positioned ourselves as that value-added investor in the stack. So we've been part of very large financings. We've been invited into financings. We've led financings that we've brought partners into. So it's been an effective model, and we've enjoyed working with a lot of great people. So, in summary, and then we'll open it up for questions if anybody's got any questions or comments. We think that the landscape has never been better for startups and for entrepreneurs. We think as an investor, we're seeing more liquidity, more interest, more engagement. So it's a very exciting time. I also think we see suppliers across the spectrum and other legacy participants in the greater landscape, travel and hospitality landscape, engaging and listening and paying attention to and testing and working with startups, which is very exciting. And we're really excited for the opportunities that lie ahead. As an entrepreneur, and as Amir said, I've founded a bunch of companies. I came to this business through entrepreneurship. In fact, I started 7 companies across my career, and some of them venture capital backed, and some have had good exits, some have had bad exits. I finally realized that I was hopelessly ADD, and the only thing that would satisfy me was venture capital, where I got to look at a million things a day. And so, but I understand the journey that you are on as entrepreneurs, and I can tell you that I think it's an impressive commitment, and it's something that once you do it, I don't think you'll ever do anything for the rest of your life. That's the danger, right? But congratulations to all of you, and I hope you have great success, and I appreciate your time and happy to take any questions.
One question right here.
Oh. I can't really see, so go ahead. You guys call it. Just stand up and ask.
I'll ask a question. A wonderful presentation, great distillation of this category, particularly from an evolutionary standpoint. The real winners come when there's revolutionary progress. So I'm wondering what you think might be that trigger event, and possibly, I might have missed it, but something in the blockchain coin world that's starting to play more pervasively across travel and hospitality. If you have some thoughts maybe on that?
Sure, yeah. So, I don't necessarily think that it's that we're looking for the big revolutionary companies that are going to change the world, at least for us, right? We're investing in companies that are iterating in elements of the value chain too. So we're happy to invest in a company at a $5 million valuation and see them sell for $55 million, and no one ever sees that in the Wall Street Journal. That was a nice incremental software company that actually did something of real value to the industry, not necessarily super revolutionary. So, there's a really good model for entrepreneurs to build companies that actually matter in elements of the value chain and not necessarily think about reinventing something huge, because that can be very difficult. Now, that said, there are opportunities, and it's hard to say where they come from. I think of blockchain as a distributed ledger technology as a technology. It's definitely not a company. I am seeing companies that are beginning to incorporate blockchain into the design of their products. Sometimes it's total bullshit, right? And they're just using the term so they can hope that it hypes up their deal, and it's really just a database, let's be honest. In some cases, it's pretty smart and making a difference. And so, we're definitely trying to get smarter and smarter on how that tech can be used in travel and paying attention, but I haven't seen anything really that jumps out. As far as crypto, we don't touch it. That is, I don't know exactly how to. I firmly believe that that will transform many things, and certainly the nature of money, I think it will. But are we in that 1999 hype stage right now? You know, sure feels like it. This is deja vu all over again. And I think there's going to be some pain and some fallout in the crypto space for sure.
Okay, next question.
Hi, Chris. Wonderful presentation. You guys have a focus of hotel and OTA focus for distribution, or for disruption. What about GDS in the airline sector, needing or overdue for the same type of disruption? From a co-founder and corporate investor standpoint, you've got a co-founder from Sabre and a board member from Amadeus. What kind of signal does that send potentially to an entrepreneur wanting to disrupt that sector, and how do you engage in that with that type of resources on your team?
So we are definitely looking at many different companies and concepts in air transportation, and we're interested in technologies related to airports. We're interested in technologies related to security. We're looking at a bunch of different things. That, and we have investments in companies that specifically play in that space. ID90 is a perfect example of one that we've had for some time. It's a difficult landscape in one sense, in that the absolute total number of potential customers is really small, and so it's a little spooky as an early stage investor to invest in somebody who has to have a couple of big wins with airlines in order to be viable. So we found it tricky to find the right entry point, and it's really kind of a deal by deal issue. But it's definitely clear that that industry is very open to innovation and what's happening. I mean, there's a reason, Bonnie has built Jetblue Ventures, right? There's stuff happening in that category that is very interesting, and we're looking at it. We'd love to do more deals there. The first 5 investments in Fund 3, or our 4th fund, have been somewhat lodging heavy. We have a tours and activities investment. We're just about to do a transportation sector investment, but then the other 3, are lodging. Although Dishcraft you could argue, is not really lodging. Anyway, but it's a great category. It's an interesting category. I think it's figuring out how to build something where you can extract enough price and margin and build a business that actually matters, and not depend on closing United and American, right? And is hard, and it's hard to sort of then articulate that business in terms of venture capital investment. Those might be the right kind of businesses to get started that seek angel capital, early stage capital, keep your costs small and grow, and you don't have to raise money from venture. Venture is a incredibly expensive asset class.
One of the things you can look at is like the Part 135 air carriers and the 121s, the large and small, basically Uberizing what Uber has done for ground transportation, but for airlines. Mm-hmm. And utilizing that kind of method.
And there's a lot of interesting stuff happening in private aviation too.
Yeah.
It's just I personally struggle with trying to figure out the actual addressable market.
Right.
But
all right. Well, thank you.
Yeah.
Thanks.
Perfect. Good morning, Chris. Great to see you again.
Indeed.
Dan Christian from the Travel Corporation, as you know, global head of digital, and there's a number of partners here today that we're certainly interested in seeing. Yesterday, you made some really interesting comments, yourself and Bonnie, at the Skift Forum about the travel, the tour and activity space. And I know there's a number of people here in the room that are keen to see them today. And you made a really interesting comment, which is that it's the last remaining sector within travel that has yet to be stitched together. We've seen some activity recently with Bokun being acquired by TripAdvisor and Fair Harbor being acquired by Priceline, and so this area is really heating up. And I would just love to know, because we didn't get to hear any more detail, I'd love to know how you might see that play out over the next 6 to 12 months.
Yeah, it's a tricky one. I mean, it turns out when we think about tours and activities, we have this tendency to generalize it into a single term, right? Tours and activities. But when you really dig in, it's made up of, a whole set of different, really totally different kinds of things, right? From museums to sea kayaking adventures to, African safaris and, a wine tasting. So it's incredibly difficult to generalize those categories. It's also sort of made up of kind of a range of unit economics where, it's a world where maybe 15% of the suppliers account for 90% of the volume, right, in the space. And so trying to think about how the long tail gets organized is something that I think is going to be a real challenge, and it's going to take some time. And it may not even happen. It may turn out to be the case that as we're thinking about this, because we all love to figure out, what's analog and how can we digitize it, right? That's kind of what we do. It may end up, in the end of the day, that the traveler just says, oh, I don't really care about that. I'm going to wait till I get there. And I'm going to ask a friend or a concierge, and then I'm just going to go and do it. And so we're going to go through all this hassle to wire people up, and then the content just isn't really going to be distributed. I don't know if that's the case. So it's a difficult one to call. There's a company out of Australia that we looked at that's more of a true property management system, reservation system, ticketing system. They're selling software, and they've carved out an incredibly interesting little niche in trampoline parks. What the heck is a trampoline park, right? I guess there's a lot of them. And then they want to move into bowling alleys. And so, is it going to play out like, restaurant point of sale systems and that kind of a model? Or I'm not really sure how it's going to happen. We've made a bet on Redeem. They're working in a very specific category of tourism activities on a very specific problem. We've put together a team that we think is going to hopefully really grow that business beyond the specific focus that they have now and begin to be that player that wires up the space. We're very excited about that company based in Boulder, Colorado. But the broader tourism activity space, I don't know. We've been looking at it for the last 4 years. We've passed on everything except Redeem, and it'll be interesting to see how it plays out.
All right, we have time for one more question. Raj?
Thank you. Hey, Chris.
Raj.
Hello again. I'm Raj Singh, founder at Go Moment. And the question I have for you is around exit scenarios. We see a huge amount of disruption in travel. Brilliant presentation. From your unique vantage point at the top of the mountain, right, and your entrepreneurial background, how do you think exit scenarios for travel companies will change in the coming 5 to 10 years?
God, Raj, I wish I knew. I mean, it's one of the things that is so challenging for my asset class is that the length of time from funding to exit has grown. And so that's tough. And interestingly enough, in our world of venture capital, you see this blossoming category of secondary funds that are beginning to buy LP interests in funds because of the length of time to liquidity. So there's this sort of new interesting step in the liquidity cycle, and companies may stay private for much, much longer. And founders are beginning to, and we see this in the sort of high value fundings that occur when a company begins to really hit some trajectory. We'll almost always see some secondary activity where founders and employees are able to take some money off the table, which I think is really smart from the investor's perspective because it doesn't benefit us to have, a founder CEO living on his parents' couch, right up into the IPO. That's ridiculous, right? So figuring out how to drive liquidity. So the whole definition of exits is beginning to just change, where it used to be, IPO or M&A, and that was it. Right now, there's these sort of interesting steps along the way that can drive liquidity to those who need it and are willing to trade, right, the sort of their asset value for liquidity. I think that we're coming into a time, though, where the velocity of exits for travel tech companies is going to increase. I will say that the private equity players that we saw are very active. There's a lot of them around the space, but you've got to be doing 10 million in ARR and have a clear path to cash flow positive in the near term to get their attention. So that doesn't help the smaller companies. Travel suppliers and other major tech players in the landscape have been acquisitive, and in some cases that's proven to be problematic, and they've stumbled because of it. Unfocused acquisitions doesn't work for anybody. So I wouldn't expect that category. I wouldn't expect to see some big catch-up play where all of the existing players just start buying companies and acquire higher. So as entrepreneurs, I would not count on that. But I do think what's going to drive the fuel that will keep the entrepreneurial engine alive is going to be this more incremental, sort of creative, partial liquidity that we see from secondaries, both of founder stock and of LP interests. And I hope to see that continue. It's good for all of us. Great. Thank you, everybody. Appreciate it.